Welcome back, class. Today we are tackling the most fundamental concept in finance, the double entry system. Many students fear this topic because they think it is complicated math. It is not. It is simply logic. If you can organize your shelf, you can learn this easily. Think of Isaac Newton. In physics, he taught us that every action has an equal and opposite reaction. Accounting follows the exact same law. Every single transaction affects two things. If I hand you a pen, you gain a pen, but I lose one. You cannot get something without giving something up. That is the heart of the system. Now, I need you to listen carefully. You must forget everything your banking app has taught you about the word credit. When the bank says they credited your account, they are talking from their perspective, not yours. For this class, delete that definition. We are starting from scratch with the business logic. Let's look at the structure. We use a T account. Debit is simply the left side. Credit is simply the right side. There is no hidden meaning yet. Just remember, the total on the left must equal the total on the right. Always. To know which side to write on, we first classify the account. To make this easy, just ask yourself 3 questions. What, who, and why? 1. Real accounts. Think of this as the what. These are physical things and assets you can touch, like cash or laptops. 2. Personal accounts. Think of this as the who. These are the people, customers, and banks involved. 3. Nominal accounts. Think of this as the why. These explain why we made a profit or a loss, like expenses and income. First, let's look at real accounts, or the what. The rule is debit what comes in, credit what goes out. If you buy a laptop, the laptop comes into your office, so you debit it. Second, personal accounts, or the who. The rule is debit the receiver, credit the giver. If you pay John, John receives the money, so John is the debit. Third, nominal accounts, or the why. Debit all expenses and losses. It hurts to pay rent, so we debit it. Credit all incomes and gains. It feels good to earn revenue, so we credit it. Let's apply this to a transaction. Bought furniture for cash, $500. Step 1. Furniture is a real thing. It comes in, so we debit furniture. Step 2. Cash is also a real thing. It goes out, so we credit cash. Debit furniture, credit cash. This is how we write it formally in a journal. Notice the formatting. The debit always goes on the top line. The credit goes on the second line, and notice how it is indented to the right. This structure is the universal language of accountants. Time for rapid fire. I'll say the transaction, you think of the answer. Paid rent. Rent is an expense, debit. Received commission. Commission is income, credit. Purchased a machine. Machine comes in, debit. Paid cash to Bob. Cash goes out, credit. Here is your summary. These are the golden rules of accounting. If you memorize this one table, you can account for any transaction in the world. Take a screenshot, keep it safe, and I will see you in the next section.